The electric vehicle industry is truly a vibrant one. For years now, EVs have been portrayed as the future of the automobile market. And thanks to companies like Tesla, these cars are really starting to catch on. Instead of just being boring cars that nerds drive, EVs have become really cool vehicles, and everyone wants to be in one. In fact, EVs have now become so popular that several major traditional vehicle manufacturers are even looking to get in on the hype as well. However, while some have succeeded, the successes of names like Tesla and BYD haven't necessarily rubbed off on everyone. Two legacy manufacturers that seem to be especially struggling are General Motors and Ford. So why is it that despite being two of the largest automakers in America, these companies have had little luck when it comes to EVs? Let's dissect everything you need to know in this video. To be fair, let's get one thing straight. 2023 was a pretty difficult year for the EV space in general. And I'm not even talking about just Ford and GM. Even market leaders like Tesla and Rivian saw a lot of headwinds last year, with many of them eventually resorting to slashing the prices of their cars. In fact, in the first 4 months of 2023 alone, Tesla cut the prices of several of its flagship vehicles no less than 6 times. And this was just the start of it. Several of the company's rivals also reported significant losses, with many now resorting to restructuring tier operations in a bid to stay alive. But amongst the companies that have pivoted into EVs, GM and Ford appear to have it worse. So let's start with Ford. The company might be one of the famed Michigan Big Three, but its pivot into EVs is currently going terribly. How terrible? Well, consider this. For every single EV that Ford sells, the company actually runs at a loss of about $36,000. It's truly baffling. Ford's EV division has been beaten so badly that it operated a $1.3 billion loss in the third quarter of 2023, and by all indications, this number is set to only grow wider. The issue appears to be the fact that Ford just isn't making enough sales, even though the company continues to plow money into making these high-end electric vehicles. The company has blamed the market dynamics, especially noting that many North American customers just don't seem comfortable with shelling out 5 figures for these EVs when they can get seemingly more reliable gas-powered vehicles at lower or comparative prices. Things got so bad for Ford that the company's F-150 Lightning, the EV variant of its iconic F-150 truck, was pretty much dead on arrival. The company has said that it will significantly cut down on the production of the vehicle, telling suppliers back in December that it planned to produce just about 1,600 Lightning electric pickup trucks a week starting in January, a number that's half the 3,200 per week that it had previously planned. No matter how much Ford's top brass have tried to spin this one, it's pretty clear what's going on. The demand for these EVs just isn't keeping pace with the industry's timetable, and Ford now has to make some serious cutbacks if they hope to get their balance sheet back popping again. Away from Ford, let's go to General Motors. America's largest automaker is an iconic brand, and it's been so for decades. But like its closest competitor, it just hasn't had enough luck with EVs. In December of 2023, GM announced that it would lay off about 1,300 workers from 2 Michigan plants. The layoffs came after the company confirmed that it would delay production of 2 all-electric pickup trucks at the plants by a full year. GM had planned to start production on the Chevrolet Silverado EV and GMC Sierra EV next year at Orion. But GM said that it will retime the conversion of its Orion assembly plant to EV truck production and restart the plant in late 2025 instead. As GM saw it, the plants would pretty much be idle. So they decided to transfer a few workers to other facilities within the state and just let the rest go. At the same time, GM had been drumming up anticipation for the opening of $4 billion plant for electric vehicles in Michigan for a while now. But in October, they announced that they'd be shelving that plan for another year. The issues at GM are honestly much worse than Ford's. The company made a big splash as it tried to go all in on EVs a few years ago, launching a new division called Cruise. But things haven't gone so well. Cruise had to shut down its robotaxi service in California after issues with passenger safety, and by December, the division had laid off about 24% of its workforce and fired 9 execs. Still, even as sales dwindled, GM CEO Mary Barra made a bold move by claiming that the company would continue to focus on its high-end EVs. Like I said, 2023 wasn't quite a good year for EVs, and to keep those sales up, many manufacturers had to resort to lowering the prices of their products. But not GM. As Barra explained, dropping prices below the $30,000 threshold just didn't make sense for the company. So GM would continue to focus on ultra-expensive luxury vehicles going forward. In the third quarter of last year, GM increased EV production by 40%, but sales only grew by 28%. Evidently, the math reality just doesn't add up. Like I've said, the major issue with these companies is that the EV market is saturated. And even worse, this market is bleeding seriously. Demand for EVs plunged in 2023, thanks mostly to the fact that more and more people just aren't feeling these cars. They have issues with range, their batteries are incredibly difficult to maintain, and you can't access charging stations everywhere. Add the fact that we've continued to see more and more safety issues, and you kind of understand why people feel a bit off about EVs. Instead, hybrids appear to have stolen the spotlight. These cars, which combine the features of gas-powered and electric vehicles, provide users with the reliability that they need while also being considerably more eco-friendly than traditional gas-powered cars. Plus, they're more affordable, and they don't come with the extra charging baggage. In 2023, Americans bought a record 1 million plus hybrids, with sales rising by a staggering 76% over the numbers seen in 2022. EV sales weren't necessarily bad, but their year-to-year growth stalled. So while brands like Toyota are cashing in, Ford and GM, which dove head first into the EV hype train, are now regretting their decision. To mitigate things, even Ford and GM are now looking to backtrack. Ford, the nation's #2 hybrid seller behind Toyota, expects to produce enough hybrids to quadruple sales within 5 years. On the other hand, GM, which abandoned most hybrids in the US 4 years ago in favor of EVs, now says it's considering bringing them back. Besides all of this, there's the fact that dealers just aren't moving units quickly enough. Many dealers for Ford and GM appear to now be sitting on stockpiles of EVs, but they just can't sell them. Things have gotten so bad that dealers are literally turning down allocations from these brands because their cars just aren't moving. It's completely unheard of. Once again, Ford and GM aren't the only ones facing this issue. Even Tesla, the market leader, has had issues making sales last year, so much so that the company has resorted to price cuts just to make sure that it moves units. Then there's the impact of the UAW strike. The strike, which lasted weeks before manufacturers finally reached a deal to end it, led to major losses for these companies. GM lost close to $1 billion due to the strike, and Ford's losses were said to have been around that number too. Still, this is just a flash in the pan. Even if these companies could produce the EVs at full capacity, the fact that demand was so low meant that it wouldn't have meant much.